Hey fellow traders, today's video is going to be a little bit different format, a little bit of a different flow. I've been going through a few things over the last couple of weeks of basically figuring out that the more technical things get, the less fun it becomes, and I'm trying to basically get back into the fun. But for starters, one of the main things, just this risk disclosure. I'm not a financial advisor. I'm just some random person with an account, and what I'm going to show you in this video is going to go against everything you've been taught, and is going to be completely crazy by most standards. So with that said, anything and all that you've ever heard about trading or know about trading, it's not going to be welcome in this strategy. Basically, I'm going to go from start to finish on everything that you're going to need. And one of the first things is, of course, you're going to need a broker. You're just going to have to make sure you have a zero spread. So let me do this with this here. Zero spread and low commission costs. So if you are by chance in the USA, one of the better accounts to go for would probably be forex.com. Another one outside of the US could be IC Markets or some other regulated broker. You want to make sure this broker is regulated, with all the prop firms and unregulated brokers getting banned, knocked out of the game, and just shut down. MT4's not taking them on anymore. Make sure your broker's regulated. If not, you're probably, at best case scenario, going to have a rough time getting your money back from a lot of these unregulated brokers, and they're going to try some shady things like slip you on every order and so on and so forth. So just save yourself the headache and stay with a regulated broker. Sometimes the leverage may not be favorable, but your money will be much safer. So with that said, we've got the number one thing that you're going to need if you're going to trade this way. Now, if you're a new trader, you may learn some other things outside of this video, and to all continuing traders who've done a few trading, made a few trades before, or have already been learning trading for a while, just make sure you keep all those things that you've learned outside this video. If it's not in this video, not in the video, it does not matter. I mean, it's just as simple as that. We're not trying to do rocket science. We're not trying to do technical math. We're not trying to do anything crazy at all. We're just simply going to play a game with the market and try to make money. Now, if you want to try to run some of these other methods with strict rules and risk-reward ratios, so on and so forth, that to me seems like it is becoming more of a job than it is anything else. And you're better off just throwing your money in a stock fund or managed fund and head on back to work, because you're going to end up more than likely losing a lot more than you win, or you're going to just have a rough time really just trying to get profitable, and sometimes it could take years. So this is going to be a little bit more of a simpler approach. It's basically going to be a vulture tactic type trading. We're going to follow just a few simple ideas and rules. I'm about to lay those out in just a second. I'm kind of winging it a little bit. I have to find my notes to try to keep things together. I'm more of a trader, not a video planner, editor, and so on and so forth. So I'm just going to get the information in the video, and we'll try to make this as clean as possible. Now, most of what I'm going to be referring to is going to be involved with Forex. You could also apply this to futures. You can see down here I've got Ninja Trader. I've got a few other different platforms, testing platforms, Trading View, and so on and so forth. We'll get into that in just a minute. But when you're starting out, basically I would recommend more than likely going to like Trading View, for example. Let me get this off the screen. You can actually use their free account, and if you hit the trade, this will say trade down here, and you can actually sign in to paper trading. and you can make as many accounts as you like. I'll sign out real quick to show you that. So basically, you'll see it as trading panel. You'll just click in here. I'll leave a link to TradingView if you want to create a free account if you haven't used it before. But this will allow you to actually practice your trading. Excuse me. And then you'll just click connect, and it'll connect right to your TradeView account. Now, they do offer something where it's called the Leap. It's a competition account where if you have a paid account and you trade this and actually come out profitable, it's month to month. They have about 5 different instruments you can trade with it. If you actually come out in profit, you will actually get your next month of TradingView subscription for free. You'll need that to do the replay on anything lower than the daily time frame. We'll get into time frames too in just a minute and how price moves. But for starters, you're just going to want to get set up with a demo account. You could also open up MT4, MT5. MT4 you'll typically get from a broker. You can't get basic MT4, but you can get MT5 directly from I think it's mql5.com. Just do a Google search for MT5, download, and it'll take you right to the main site. I've got multiple different strategies right now that I'm testing. We'll get into some of these other methods. There is one other method that I come up with that's more of a brute force but very patient type strategy. So far it is, which count? Okay, that's that one. Sorry, just kind of taking a look at a few different things. Let's see, I've got Forex.com picked out here. That's what I've been kind of trading with because that's the USA account that I would use as a regulated account to give 1 to 50 leverage on most pairs. Euro USD is my favorite pair to trade. For this strategy, you're only going to need one pair, one instrument. You don't have to have, a humongous watch list of just, all of these different pairs and thousands of different indicators and alerts. You don't need all of that. I'm just going to show you a very simple way to basically play a game with the market and keep control of your account, manage your risks, so on and so forth. But we're not going to follow any conventional rules. So no more. I'll try to stop foreshadowing and keep things moving along. TradingView is one good method if you're looking for testing. There are a lot of good back testing names out there, but I do always recommend Forex Tester 6. It is much better at cost analysis, keeping track of your swaps, your commissions, your spreads. I mean, everything is fine tunable. You can use your leverage to where you're not buying more than what you can afford on margin. Margin is basically how much money you need in order to secure a position in the market in order to open a trade. So you're going to need some type of funds. So when you start live trading, you're probably going to be trading with a small account, and that's what I'll use in the example today when I go to show some forward testing. So we've got that part. Now what we need to talk about are the basic rules of this game I keep referring to. So let me get my pen and board back out, and we will start covering the basic rules of the game. So in the market, in any market, it doesn't matter if it's Forex, crypto, stocks, indexes, futures, whatever. Price can only do one of two things, really three things. Everybody says three things, but it's only doing two things truly. They only say it's three things because of the time factor, but price can either go up. Price can either go up. Why do I not have the correct pin? There we go. Maybe. There. What is that? D. Okay. So it can either go up, down, or do nothing at all. Now in your trading account, you have the option to buy, which is benefit to your account if the price is going up. You have the option to sell, which will benefit you if the price is moving down. And you also have the option to do absolutely nothing at all. And that's with no positions in the market whatsoever. So this is how the basics of the game works, and we operate and connect to the market We're basically just connecting or disconnecting our account to the market, and we're going to use a different one variable to basically control how much these actions will affect our account when we're interacting with these actions. So this just keeps it very simple, very straightforward. This is what the market can do. This is what we can do. So it's all an equal level playing field. Now, when you open a position, uh, some people sometimes have a little bit of difficulty with this part, but basically, um, with this part, you're just going to use your size to determine how much you're going to affect this, and this is often referred to as a pip value. And a lot of times, this is one of the reasons I like the Euro USD, because I use a USD account and we're trading against the USD. If I'm opening a 0.01, which is 1,000 units, if you're using a broker slash units type account, if you're not using MT4, MT5, you may be trading in units, or if you're trading directly on TradingView, a 0.01 is represented by 1,000. But if I have one of those in the market, my account will change by plus or minus 10 cents for every time the price moves. So if I'm in a long position, I elected to buy, and the price does go up, my account will gain 10 cents every time the price goes up one full pip. And in the case of the Euro USD, for example, it's a 5-digit decimal. So like right now, I think it's at 108,327 because I'm watching it in another account. So if we were to realize that 10 cents value, that means price would have went up to 108,337, because our second value is going to be our pip value. So this is the actual pip. This is the point value here. The last digit is the point. The second to last decimal is the pip. So if you're in a 3 decimal, for example, the JPY, and it is at right now 151, 185. In this example, since we have 3 decimals, the 8 is going to be the pip, and the 5 is going to be the point value. And sometimes in brokers, this will actually be represented as a smaller number or superset number. It may be written as a smaller number up as like a power raised to the power of, but that's going to be your point value. So basically working with that, we know that now, there it goes. Okay, now, so as we're going, what we're going to do with this strategy, we're going to basically vary how much we're affecting our account with this size and control our pip value. Now, if you're using a different account, like if you're using a Euro-based account and you're trading the Euro USD, this value will actually be less. It'll be 0.0912 something, something, something. I'll show you an easy calculator. I actually can include a link to an easy calculator that will actually show you how much value is going to be in each position. That's pretty easy to use here in just a few. But just understanding that this is the way we're going to play the game and control our account. And then once we get into examples, we'll get more into how this part is going to play a role in keeping our account under control. So now when you first start an account, at a minimum, I know I kind of mentioned when you're starting out, you're probably not going to have much. I know Some brokers may allow you to get in with as little as $50 or $100. Oftentimes, though, you may want to start with a little bit more. You may want to start with 150 or 200. This will give you a little bit more room to work with as you're learning out and getting the hang of it, because you are ultimately going to lose a little bit throughout the process. It's just a part of the game. So just understand that if you need to pay your rent, pay your rent. If you're looking for trading to make your $20 into your rent money, go buy a lottery ticket, because I promise your odds are much better. Just being upfront and honest about it. So now that we've got that taken care of, I'm going to go ahead and pull up some Forex testing software, and then we're going to start looking at a few different ways of how we're going to handle playing this game in regards to what's actually happening on the chart, because this movement of the price is what's going to actually affect our equity and balance and what we have to work with and how we're affecting our account. It's also going to basically give us clues into which way we want to take action with what's actually currently going on in the market. Now, a lot of us are probably familiar with candlestick charts. Basically, you have, if a candle got larger, if the price went up, this would be the open here at the bottom. Then the little line at the bottom would mean that price came down just a little bit, went up. There's no line at the top, so that means here at the very top, where it's a full colored in area, that means price went up. And at the end of the 1 minute mark, price was here, and then the next candle opens here, came down a little bit, went up, came back down a little bit, and stopped here. So that's how we're basically reading the candles. Sometimes you may see the chart as a line chart, or it could be bar charts, where basically you'll have where price opened on one side. The bar will represent where price traveled in that current amount of time, and then another line on the right side of it will represent where it's closed. That's considered a bar chart. You also have your line chart, and that's basically at the end of every candle is what you're going to see on a line. It's not going to show the wicks. It's not going to show all of the full travel. You're basically just going to get something like this, where at the end of every minute, each little point or spot in the line will represent the end of 1 minute, where price was at that very split second when the minute rolled over to the next minute. So depending on how you want to look at it, I kind of recommend using candle charts or bar charts. And if you're looking at price going down, of course, you can see we have a different color candle, but price opened here, went down a little bit, came up just a little bit, and then closed right down here. So that would be the reverse of the green candle that we saw on this side here. So that's basically the simplistic form of what you need to know. Know a lot of traders will refer to support and resistance, but honestly, I don't know how much you can really put merit to that, because if there was much to really rely on, other than the fact that you will see some type of change in activity and what's going on when it reaches this certain level. A lot of times it's often referred to as where price is touching multiple times. But in this case, it's kind of foggy on what's exactly going on here to there. You could say that's a level. You could also say this is a level. That's a level. But the thing is, you'll get these things so close together that you just have no chance to make a proper profit without basically analyzing yourself out of the trade or keeping yourself completely out of the market, because you just don't know anymore. So we're going to keep a clean chart. We don't need this line. We're not going to use any of those lines. We don't care about past price action or any of that. And to make this a little bit more interesting, let's go ahead and start up a new project with a different pair. And we'll start doing some testing and explaining on ways we can tackle making a strategy or just directly flowing with the market using a few different, basically guerrilla or vulture type tactics. I'm going to start this account at $200, and we will trade the USD CAD just because it's something a little bit different. And we're not going to go all the way back to 2003. The markets are a little bit funny here lately. I know we also had a bull market run during the pandemic. So we're going to try to use something a little bit closer to our current time frame. And I believe I do have enough data for that already downloaded. If not, I'll have to figure out how much I got, and we'll work with that. Now, and one of the things I love about this system, especially for testing scalp strategies, is you can actually generate some random ticks. And you also have the option for floating spread. If you're using a zero spread account, oftentimes you won't need to use the floating spread option. That puts basically a little bit of a gap between the price you get and the price you're actually placed at when you open the trade, which can affect your overall outcome and performance. We're not going to be needing the floating spread because on a Razor account we just don't have that. It may blip every now and then to spread apart, but then it always comes back together really quickly. So we will start that and check the history. Takes a little bit of time to kind of set the project up and make sure all of the rates are correct. I'm not going to worry too much about swaps in this. We're going to use a GMT 0. We'll use a US daylight savings time. We're going to start from the first date forward only, so we can't go backwards, and we are going to start with absolutely no history whatsoever. We're going to let that generate, and then we'll go in and set the cost up to make sure that we're getting an accurate representation of what we might actually get in the market as well. As far as time frame, we're going to be using the 1 minute, but let's stay on track to what we're doing. I'm going to go in the data center, USD CAD, and change properties. I'm going to leave this at 1 to 50 because that would be the US regulation max leverage. And I do have a leverage of 50 to 1 on the USD CAD through Forex.com. I think it's represented in percentage on their website. That's usually where you're going to find your information for cost, spread, and so on. It's also going to show you your swaps. I do believe it's like 0.7. No. It's 1.12. This one is, I think that. I believe that's what it is. I'm not sure. It's not really going to come into play a factor. And I usually like to apply this when I open the position just to get it out of the way. Some brokers may do either one of these three. I'm just using this setting here. I think it's open and close. If you do use this option here in the tester, you'll have to actually split that in half. So I just use the open position to keep it simple and have it go ahead and automatically charge right from the beginning. So we should be completely set up, good to go. All of our settings are clear. And now the next part that we want to get into is when we're going to be trading and how we're going to actually be trading. So to begin with, I'm going to pull TradingView back up, and we're going to take a look at charts and time frames. Now, one thing I want to try to clear your mind of and set a new perspective of is a time frame is not independent of another time frame. Now, oftentimes you can look and get a bias of direction from the higher time frame because it is very true that more money is traded and applied to technical analysis, which is trend line, support, and resistance off the hourly chart, but these have no real predictive power. Basically, what's happened in the past has already happened. Forget about it. It's over. It's basically as simple as that. I mean, we can see several times where price just went wherever it's going to go, It doesn't necessarily respect any pattern. You can't really say that, if you're way back here and none of this, you knew none of this back here, and we're back here at this point in time. How can we know for sure that it's going to bounce here and that this is actually a level? How can we be sure that it's not going to come down here and make this be the level? And then when it did come down, you see that it kind of just floated and made a level in the middle of nowhere. You could maybe even say it made a level off of there. But none of this is really science. It's more just more or less guessing, I would say. But you have to look at price as a rope or a string. And it's all part of the same string. So right now, price overall is going kind of flat, even though in the longer run picture, it's kind of an uptrend. It's moving upwards. So in this case, if we were looking at a higher time frame to do this, which I wouldn't really advise because you can only predict so far ahead. Plus, we have news and so many other factors that can influence the outcome of the trade, and we're going to try to avoid and slip in and out of a lot of this once we get into the actual trading part of it. But for the time frame part, this strategy itself will actually use the 1 minute time frame, and we are only going to look at about maybe 10 to 15 minutes of data at most. We only need like really that much, maybe even less than that, in order to know and figure out and get in line with the market and currently what it's doing right now. So, I mean, a lot of people would say this 1 minute chart is chaos, but it is nothing more than a string, a pattern on a string inside of the same rope. I mean, it's all connected. There are no separations. You can't go to a 5 minute or a 15 minute and see that it's doing something completely different than where it's doing anywhere else. No, you're just looking at a very close picture of it. And because we're trying to trade in the moment, trade what's going on right now, this very moment, then we are just going to look at the most recent price action and most recent events of what's going on. And we're going to try to get in line with and take advantage of some of that move. Like as it's moving up here, we're going to try to get some or good parts of all of this move as it's moving up. We could even do a little bit. We'll kind of look at some other ways of reading things in the moment without having to rely on support and resistance and all this going on back here, because there's, oftentimes you'll run into situations like here where there's nothing back here for a long time. And then, that's not going to help you out at all here. Plus, the world was different. Things have changed. And it's just not going to line up. It's not going to do the same things. It's always doing something new. It's going to go where it's going to go, simply put. What it's doing, you can kind of expect it to do until things start changing. So now it's in an uptrend. So now we can expect it to start and continue moving upwards until eventually it just clearly looks like it's starting to move down. And we'll get into one other way you can kind of keep up with this information without having to keep constantly zooming out and looking at things from afar, because basically, like I've said, what's happened has happened. It's over with. It's gone. It does not matter anymore. It's over. You can't do anything with it. It's not going to predict anything in the future. You can look at it overall and think, okay, maybe we might be looking to go downward here. So we'll see if this breaks and then take it short if it does. So that might be one potential way to look at this. Because if it's going to go down, it's going to go down. All of this back here means absolutely nothing. It has no effect on it at all. So just want to make that part very, very clear and understood, because, like I say, I mean, we're not following conventional wisdom. This is raw and basically unaffected, an unaffected type strategy. I'm basically taking a lot of the newer techniques that I've figured out, and I'm putting it with the way that I taught myself how to trade before I actually discovered any other type of training, formal or informal. So this is going to seem a little bit different, but now we're going to start getting into the strategy part. Basically, this is the way we're operating and we're playing inside the game. What's happening now is what's going to affect our account, so that's all we're going to worry about paying attention to. So I'm going to go ahead and close that out. Let that finish, and I'm going to go ahead and start to get a little bit of time in, and we're going to get into the next part of this, which is going to be when you want to be trading. So we've covered the time frames. Now we just need to cover when you're going to be trading. That kind of depends on your goals, what you're looking to do, when you have time available to trade, how comfortable you are with actually being in the market, or what you're looking to accomplish. But for a general rule of thumb, if you're looking to really have a steady and more predictable type price action where it's not whipping and going crazy and moving really far one way then really far the next, you may want to stick to some of these lower volume sessions. The volume is going to represent how fast price typically moves during these times. And on the chart, you can see a UTC listing of the hour. So this line here would represent 2 o'clock. This would represent 3 o'clock, 4 o'clock, and so on. And the main sessions to worry about are the Tokyo, London, and New York. Tokyo session is always going to start at midnight UTC. London session will start, I believe, I thought it was 7 o'clock. This chart says 8. But your London session is going to start, I do believe, at 7 or 7:30 a.m. Then your New York session starts at 1300, and that should be 700 when the London starts. I'm pretty sure that's 700. I think that's a little off. But your London session is going to be more of your moderate speed. Your Tokyo is going to be slow. They oftentimes refer to this as the Asian range. Price usually does not move much, though I have been seeing some fairly significant moves more often than not during the Tokyo session. So depending on what pair you decide to trade, you could see some different things. New York is going to be your fastest. That's when you have the highest volume of trades. And if you'll take note, the open of every session has the highest volume, including the Tokyo session. And you can actually take advantage of this information for when you're sitting down to trade. So if you're sitting down to trade the open of the London session, you could let things open up for a little bit and notice how as the volume starts to slow down, usually by that point in time, if it's moving in a set direction, it will typically continue in that direction until the very next session. So you may actually open in the London session, and by about 8 o'clock UTC, you may see it's in a downtrend, so then you know that you can start taking some shorts and actually more than likely be in line with the current market. And then once 1300 comes and the New York session opens, it very well could change direction, and then usually by about 1400, 1430, it will have picked a direction, either the same way or a different direction, and then you know now you're looking to go a different direction until a few hours into the session, about halfway through the session, and then the end of the day is usually for just a little bit of finish up, transferring and rolling orders, so on and so forth. So there's not really a whole lot going on in this period. Usually between 1900 to the end of the day, you don't generally want to be trading too much. It's just not going to be worth it. You're going to have to deal with the end of the day, and price is more than likely just not going to move. You really need price to be moving in order to have your account move. If price is sitting still, you're just at risk of losing money just by staying in the market, because now you're in a point where you're guessing and hoping. And we don't want to do any of that, because that will definitely cost you money in the long run. So what we're going to do, let me go ahead and play through just a little bit here. And we will get just a couple of hours. I'm going to try to get this to run. Actually, we could probably trade just about any any action, but we do need to get a little bit into the market day. I usually would advise against the first hour, hour and a half of the market. You probably want to give it just a little bit of time to get going and kind of pick a little bit of a direction. Now, oftentimes when you're looking at short-term information, especially when you're trying to determine what's going on right now, oftentimes you can use price action techniques and tricks. I need to actually get a little bit more data to kind of demonstrate what's going on. Okay, so now we're going to get the day going just a little bit more. Probably going to wait until the London session to really start with this so we can get a little excitement in the video. A couple more hours coming. Okay, so now we should be in our London session. But the way we're going to basically handle trading this, and the way we're going to look at trading this, is we're going to use basic structural logic. So right now we can kind of see that price isn't really going anywhere. It's going up and down in a kind of a small area. But whenever you're looking at price action, in a sense, especially when it's up close, you've got price either not going anywhere. So you're going to look at it in a horizontal sense. You're going to look at this to go down from this level every time it comes up and keep doing that. And every time it gets down here, you're going to look for it to continue going up. Once it breaks through here, it's more than likely going to keep going up and keep doing what it's doing until eventually, like here, you notice we have the basic theory of higher high, higher low. Now it's starting to make lower highs and lower lows. So these are the changes in the markets. We're in the market where we're going to be changing our position around. When price is kind of tight, not moving around too much, it could be a little bit tricky to work with this strategy, and you may end up taking a few losses in a row, but there's actually a way to handle that quite easily. So taking a look at that first part, we're basically looking to have a sell position if the market is going down and a buy position if the market is going up. One thing I like to do when I'm actually looking this close at the chart, I'm not a very big fan of indicators in the typical or common sense, but I do actually like the RSI very much for the up close and personal action, and I'll explain why in just a minute. But first I'm going to go through the setup. We're going to use just the default values, 14 for the period. We're going to apply it to the close. And then for the levels, it typically is set for 30 and 70. I'll change that to 20 and 80. Not really that relevant, but usually, typically, once it reaches beyond the 20 or the 80, a lot of times, not often, but a lot of times, at least the market will change. It will either go flat or it will reverse. More often than not, it goes flat and then continues because if you go and you try to sell above the 80 and buy below the 20, you're just going to lose your money every time. It's just how it works. The 50 line is really going to be the most important one. And I'll start kind of explaining the interpretation of this indicator and how we're going to use it. Oftentimes people will say if it's above the 50 line, it's going to be in an uptrend. If it's below the 50 line, then price is moving down in a downtrend. But we have to eliminate the word trend from that actual vocabulary of term, because there's never a trend with this. It's either showing upward pressure or downward pressure. And the way that we're going to actually use this RSI indication is we're going to look at it in terms of actual strength. We're going to use it for its verbatim meaning. And the way this works is if price is moving down, typically the RSI will be moving more downward than upward. So it kind of is traded the same way along the lines as market structure. You could still see and show different things, even though we don't look very far back. But you can notice a little bit of a trend line, then it kind of breaks, comes back up to retest, and then starts to roll over. And then price, as you can see, is starting to roll over too. So this will give you a little bit of an early warning when you see this long down push that breaks below. And we got the strong push, even though it came back, more than likely because it's staying below the 50, it is a good chance it's probably going to be rolling downward. So we would actually be looking to go from long to short in this type of area here. Now, when price is not moving too much, you do kind of want to exercise your right to stay out of the market. This here is a very tight range, very tight area. It's not really doing too much until it gets this push out and starts moving again. So in this area, we want to have our X in play. When we have sharp moves and strong pushes up, we want to have our buy in play. And notice how we're making very strong pushes onto the RSI, but very weak pushes back in the sell. Very slow, very weak, and strong pushes up. So that's going to show us that there is upward strength in the market until this little trend line that the RSI has made is broken. And notice that once we finally break, notice what also happened in the price. It broke as well. Now, the way the RSI itself is actually working and the way we're going to use it, stop doing that. Okay. Now, the way we're going to use it is basically if price went up, the RSI is going to take the distance that it moved, also kind of factored in with your tick values or your tick volumes, but it's going to basically take the move up, it's going to take that distance, and it's going to apply that to this formula to either go up or down, and the same thing vice versa when it goes down. Now, if it's making smaller moves down, then this line here is going to move a very tiny amount. But if the next move, you have one price change and price literally leaps up very high, it's going to actually cause this RSI line to go up much steeper. So we can actually tell that this downtrend may very well not continue long, and it could actually turn around and reverse. And the way I'm looking at that is, even though it's broken down, price is kind of holding still, we can notice a little bit of a swoop and kind of a pickup on the bottom of the RSI. So we got the low, higher low, higher low, and we should be making a higher low here. If we do, then we're more than likely going to go higher. So we're just reading this just like a line chart, a pattern chart. We've got our double top here, price broke down. So your basic price action points that we're looking at, those will become effective and helpful, but they're not going to be predictive. The only way we're going to be using our price action patterns, because patterns don't really mean a whole lot, but in the case of the where we're going to be trading this, price action in reference to a double top, a double bottom, the head and shoulders, these will be patterns that will indicate to us that we may be potentially going to change directions. These are considered reversal patterns, and these are about the only ones we're really going to look for. And then we have a secondary set of patterns that we're looking for, and these are going to be trend lines. So basically, if you have price making higher highs, higher lows, we're going to draw a trend line across that, and once price breaks, now we know that we're not long anymore, we need to go short. This will all start to kind of make sense, because the whole idea of the way we're trading this strategy, we're trying to take advantage of the small moves in the market, but also stay in the market with certainty. We're not going to be guessing, jumping in and out. It can sometimes tend to cause a few in and outs and we lose some money, but we'll cover a way to handle that problem without even any stress here in just a moment. But these are basically the only things we're looking for: the double tops, double bottoms, head and shoulders. And that's basically where you have a left shoulder, a higher high to make the head, and then a lower high to make the right shoulder. That usually indicates the market is reversing, going down. And then we have our basic trend line break. So those are going to be about the only things that we're looking for in regards to price action. Very simple. And the only reason we're using these patterns in price action and calling them patterns is because they're generally accepted by most people, and regardless of the fact of what they understand of the overall picture or what's going on in the market, they will take action on this. Almost every time that you see a head and shoulders pattern, price will go lower and it will come back. Now, whether or not it stays here and goes down on the neckline, as most people will advertise, is completely up to what the price is deciding to do at that current time. It may completely ignore that neckline and just keep going. So we're going to be in this moment looking at that to determine if we want to hold our trade or get out of it. We'll know because typically if we're in this situation and we will have this trend line break, that will tell us that we're no longer long, we're going short here. But if we maintain that trend line up, that neckline is no good. This whole pattern is ignored and we're going up. So that's kind of how we're reading these patterns and using these patterns. We're not going to sit here and wait for a head and shoulders and then wait for price to come down and then wait and then say, oh, now we're going to sell. Yeah, let's get in. Let's look at that. Because it's supposed to go down because he said so. No, it's not. That's not how we're going to use this at all. We're just going to use this to know that whenever we see this, we know people are going to be jumping in to buy. That's a promise. And then we know that once price comes back to this area, we're going to get some activity, we're going to get some action. Doesn't mean it's going to hold, doesn't mean it's going to bounce. It just means a lot of people are going to be interested in here, and we're going to see price go nuts. That's it. So same thing with the double tops. A lot of times you'll see the double tops where they just continue and keep going. They'll just break and keep going, keep going, keep going, keep going. That's usually a pretty common occurrence, but same thing will happen with the double tops. It'll come back, retest. You'll have a neckline. It could even come up part way through, halfway through. It could even come past it and then come back down, which is a completely different setup. We never want to jump in right at the top when it breaks a new high. That's always dumb. You will always go negative immediately. Don't ever do that. Please just keep that in mind. So we're going to avoid that at all costs. That is basically the only thing you have to worry about in regards to actually reading price action. So never buy the new high, ever. Because what's going to happen every time is price comes back and you just lose money or you get scared out and eventually price goes there anyway. And now you thought it was going short and you end up losing money this way too. You lose money, lose money, lose money, lose money, lose money. Don't do that. Just avoid that altogether. And we'll try to stay and catch these little points here and make trades in these little points here. These are the points we're going to be looking at in the strategy. So now that we've kind of covered a lot of theory, we're going to kind of put everything together and we're going to go ahead and start trading this example. So let me run price forward just a little bit further. Get a little bit into the day a little bit. There we go. Get a little bit of time in, get some volume going. And why is our spread so wide? Let me fix this real quick. I thought I had this set up. There we go. That might be it. Okay. Let's see if that fixed it. We still got a little bit of spread, but no matter. So we are on our 1 minute chart, and right now what we're basically looking at is we have our trend line break. So at this point, this would be a good opportunity to go short. We also had price going sideways here, It broke a horizontal level, so now the horizontal is no longer in play. We're looking at down. And then if we're looking at our indicator, it's showing below the 50, so, and also pushing down. We had a break of a horizontal level there, confirming and lining up with our price action. So to start with, we are going to start with our smallest size that we have available. I would recommend this to be either a 0.01 per $100 of account capital. But if you're just starting out or just getting into using this strategy, it's probably better to use a 0.01 per 200 to start out. And that's what I'm going to do in this example. And that's it. Our simple analysis shows that over the last few minutes it's going down. So we're just going to hop in. No stop loss, no take profit. We are just connected to the market, and that's how we're going to roll with it. So basically what we're going to do is allow price to play forward. And I typically recommend to try to keep this at a slow speed. Don't just jump ahead thousands of candles, because it does kind of tend to cause you to get careless. You'll miss certain things. You'll overlook certain things. So you don't want to make it too fast, but you don't want to make it too slow, because you'll just fall asleep while you're testing. So you want to just kind of keep it at a manageable speed where you can react. I've got a little tool here called the what is this called? The Forex Speed Up. Comes with the Forex Tester 6, where you can instantly put in your orders. You can close it with the X here. Buy, sell, everything is controllable here in a very tight area. So right now we're just kind of keeping an eye on the RSI. If it does break out, and we're starting to break, so now what we would do in this case, we have a closed candle confirming that we're starting to break this little trend line here. We could be going back up to retest this level as a little bit of divergence, but we're also showing that, notice how it was slowly coming down, slowly coming down. Now we have a sharp push up. We had a sharp push in the candle. So it shows that there's a lot of power, a lot of strength coming in this candle, and this could very well push that back up. So right now we have just a small loss. One thing we have to account for is our commission. I usually like to convert that into points, and I actually have a calculator that can handle doing that I've got created. It's also a performance tracker, so you can kind of see how you're doing over the course of a short period of time. A little performance indicator. As long as this diamond stays above this line, you're going to make money over the long run. It gives a nice breakdown of some different trades, and this was another different run that I did, doing some smaller things, smaller tight trades, testing one of the blitz trade method on this one here. So that was one of my performance results from using that strategy. So a couple of different examples, but one of the things I want to point out is you want to know your commission as pips. And by knowing this information, knowing that once price moves ahead, so like in this example, we have a sell on in the market. If our price gets here, we've still lost money. We actually need our price to move a little bit in our favor in order to actually break even, because notice here we're getting charged $5 per lot, and on 0.01, that's actually 5 cents of our account balance is charged to our commission. So we'll need this position to actually go in profit 5 cents, or half a pip, 5 points in this case, in order to actually be at true break even. So that is going to be one little important bit of information to know, because we're not actually looking for any giant targets. We're not looking for any massive R ratios. We don't need to hold a trade for 6 weeks to get a 4,000 pip move. We're not looking for any of that. None of that is required. Now, we're going to go ahead and address the loss issue here, because we are now going down a little bit in our equity. Our new balance, tick that forward, is now 199.74, so we lost just a little bit. Now what we can do is we can use the same size, and note that we may have enough distance here in order to regain that. But one thing I would strongly advise doing is tick that size up just a little bit. You're going to go up to the next size, because what's going to happen is now, instead of needing to recover the amount we lost from entering that trade and being wrong in order to get profit, we make that distance much shorter to regain that loss. And then anything after after actually about 1.5 pips is actually going to be profit at this point. So as long as we make it beyond here, if we go long and we make it beyond here, we make money. So I will put that buy position on, and we will continue to let price run and see if we can get a little bit of a profit. We'll sit and watch price. If it does tend to go against us a little bit, that's fine. We'll close it out. We'll take another small loss. So we'll lose just a little bit there on that because it's breaking down, and I'll just go ahead and take the sell, because now in the picture of the RSI, it looks like we're starting to slope downward a little bit. So quite quickly, we lost about $1. But we're still continuing that overall downward trend, so we're going to kind of hold until we get some confirmations. You want to try to be careful about going too big too fast, especially if you're inexperienced. You could get into trouble with price moving very far, but these candles are going to stay relatively small. And if you have a major loss, it's because you refuse to accept what's going on and you just didn't close out. So if you had went long here and you start seeing all these candles and you just let them play and you're still holding your position here, you are clearly not looking at what's happening in the market and what's going on. Right now, we're just seeing the overall shift to push down, so we're going to try to stay and ride into this. And what I'm going to be looking for from this point is this little line here. If we start to get a break and push, we've got a little bit of a immediate support and resistance. This is the only amount of support and resistance I'm going to pay attention to. And now we're starting to get that break, so we're already incurring a few losses. And notice how quickly this can go the wrong way. So I'm going to actually give this one final chance of the trend line here. We still have the downward shift. It kind of pushed above the 50 and now it's coming back. We are starting to get a little bit of an upward trend, but we still have this going here, so we'll see if price comes downward a little bit. Right now we've got kind of a shallow slope. Don't need that. There's my button. That's what I was looking for. So we're kind of looking at something like this, which is still a little bit downward, but now we're clearly starting to break. So I'll bump this up a little bit more. We'll go to buy. We're only down $2 at this point. So moving a little bit slow, but now we are clearly pushing up. We've got that little bit of a curve in the RSI. So we're showing more upward strength starting to come in. It is a little bit rangy right now. A little bit up, down. We did break through that little trend line and immediate price action. So we're going to keep this rolling and see if we can get a little bit more out of this and see if it does come back and hold for this level as being support and push up. So far, our trend is showing that it's going to probably stay flat. Usually when it's between about 45 and 55, it's usually showing flat price action. You'll start noticing over periods of time when you get experience with this, when you notice the RSI is kind of tight and flat, usually price is consolidating, staying kind of tight and close together. Right now we're going kind of flat, so we're seeing a little bit of consolidation. We're staying between that 45-55 mark. Once we break free from that, then we'll be able to see which way we're going if we're going to pick a trend. Because it's moving up more than it's moving down, I'm expecting this to kind of continue upwards, so I'm just going to hang on to this position for a little bit longer. And we're just going to keep an eye on our equity. Once we do actually go into profit and our equity is positive, then we'll resize back down to our starting size. This will basically keep our break-even point of the account very close to where we are in the trade. That way, once we even get just a little bit of forward progress, we've made money, and we can take that off the market, start fresh again, and keep it going. The idea is not to be greedy. The idea is to keep the account moving forward. We're basically picking out little bits and pieces of the market to try to work in our favor, and I'm going to let that kind of pick a direction at this point. It's kind of going up and down and all around, but not really going anywhere. So I'm going to see what's happening. We've got a little bit of a trend line. Looks like we're going long here. So now we're breaking up. Should have left the other trade on, but I'll do that at the same size. A few dollars down, but it'll quite quickly come back here in just a moment. The USD CAD does have a little bit lower pip value, being as we're converting to the Canadian dollar and not trading against our own currency as we are in the Euro USD. So Euro USD will be a little bit higher value, and it could be wise to stick with a lower pip value pair at first as you're getting comfortable with working with the strategy. You're not always going to be profitable, but the idea is to try to manage your risk. Try not to get tricked out too many times. I'm not too familiar with the CAD. It does look like we are clearly breaking down. I'll size up one more time. We are starting to have an overall trend line break, so we're likely going to be moving downward to this level here, also starting to press down. So this is where indicators can sometimes get you in trouble, and you don't want to directly trade the indicators. You just want to use them as a little bit extra information. Right now, this market is not doing us many favors, but we've only lost just a small amount of the account so far. No major deal. If you're just starting out, you may want to set a maximum loss limit of maybe 3 to 6% of the account. You could have some bad days. You could have some good days. After a while, it'll take a little bit of practice. Your number one thing is making sure that you don't hang on to a loser for too long. Right now, I'm going to sit and wait on this just a little bit longer. And see, as you size up and get bigger, these moves will get more expensive, so you will have to sort of be careful with that. One thing that some traders may like to do is average in and leave some of these positions on. If you're doing this in the United States, hedging is not allowed, so you may run into a little bit of trouble with that. You'll have to use probably a units-based account in order to work around the first in, first out rule. And right now we're just kind of ranging, so I'm going to more than likely bet on price coming back, if nothing else, to reduce the amount of loss taken. And you could see sometimes upwards of a handful of losses in a row, but the key idea is that you will get that back. So I'm going to wait until we get a definite direction out of this. It does look like we are starting to turn short. We do have that sort of double bottom, and as that started to show, it picked up momentum. We've got people buying in. I think we're probably going to go long and continue that. And we'll see how that plays out. See if we can't get that $8 back. This can change your account rather quickly in some instances, so you're going to have to keep an eye on that and try not to get too involved with flipping too much. Oftentimes it's recommended, if it's kind of not moving around too much, to kind of stay out of the market. This is why it's important to recognize when you're going to have some volume, when it's a later portion of the day. And the main thing you'll want to get good at is hanging on to your winners. As long as you can hang on to it as it's going in your favor, Once you do finally get that direction right, then you'll be able to recover and actually make the forward progress. Sometimes this can run on for quite some time. So we'll hold this up and see if it's going to continue. Right now, it's still making that upward move, and notice how we're starting to get some reactions at it, price getting to the 80 mark. But we should be able to see some more continuation. It'll kind of knock it back down. That could actually start to return and start going back up from this level here. So just hang on to it as it's staying above the 50. As long as it doesn't snap down below the 50 and stay, we can kind of expect price to probably continue upward in this case. So we'll hang on to this a little bit longer. Let's see if we can eventually come out on top. Just a little bit longer. We do have a trend line coming here, so we could actually use this to our advantage and see if price is going to stay above that trend line, and that will also help confirm that we need to hang on to the trade a bit longer. But notice how it made new highs. If you had bought here, notice how quickly it would have went back against you, and now you're way up here if it should choose to break. So that's why you want to try to avoid buying new highs or selling new lows, because very often you'll get trapped in the bottom. See, like here, if we had not come out of that trade, we would be way down here and almost zero chance of it even coming back to break even. Okay, so right there, we're kind of going and showing it's a little bit of a downward slope, but we're still staying above the 50. I don't know if we can do anything else with that, but we are pushing back above the line. So we'll hang on to this a little bit longer and see if it holds up or if we end up making a double top here. Now you could choose to add in a stop loss at this point once it starts going in your favor. But generally I like to just pick and choose. Like we see, another key thing that I'm going to go ahead and point out is you want to take a look at momentum. So oftentimes when you see a strong push and then suddenly price stalls and continues to stop in the same area, generally that's an indication it's not going to go much higher. Now right now in this situation, we're still about $5 down. I'm going to probably tone down just a little bit, and I'm going to wait and see if this breaks. If we do get a break, then we know to go in short, and we should be able to recover the other 5. So I'll continue the price, and we'll see which way it wants to go. We are getting a bit of a breakdown. Price is kind of losing its strength, and now we are starting to get a little bit of a breakdown off the line. Closing across. I'm going to go ahead and enter the sell position there. Let's see if it's going to consolidate or come back, or now it's going to run away. Or is that just a grab for liquidity? We still have a low strength. It wasn't really showing a whole lot. We're probably going to consolidate and stay below this line now. We definitely have a break, so we should see the market continuing to roll. Comes that strong push in. That is usually a good indication of a sign to go in. When you see a large, strong, hard move suddenly, that will indicate usually that a lot of money just shifted around in the market. Oftentimes that will give a good indication of where it's going to go in the next few candles at least. Also, another thing to note is when you have some strong force downward, or in this case upwards, it will start to give a little influence, a little pushback until we break through this. So we could see a little bit of a fight to go down, but eventually it could push its way all the way past, and then it could actually start sailing downward once it breaks through that. But notice how we had the trend line break. It's now pushing down, just like what we had showed in our setup of price action earlier. This was sort of a double bottom instance. It caused the reaction upwards, but now we have the break, which is causing the reaction downward. And we can view this here. We've got a nice steady downtrend on the RSI. So we're showing sell pressure build its way in. And if it stays below the 50, it should continue downward. We'll see how far we can get with this. Now here's that instance where we have the double top. This would be the neckline. So we should see some traders react to go in short. Markets are fractal. You're going to see the same reactions, the same type of behaviors, because this price is nothing but a representation of everyone's feelings. That's what it will always be. This is how much we feel it's worth right now in the free market. So these little patterns, they don't indicate anything indefinite or certain, but they will cause reactions and emotions because most retail traders and some institutional traders will actually make patterns out of this or make determinations of setups out of this with other factors. And price action is just extremely common for a way to trade. So a lot of people will take advantage of this. Now we're getting the very strong push down. Our equity is starting to come back up, and we'll see if we can push this thing into profit before finally ending the video. You want to be very careful about trying to average in or add more positions in if it's going in your favor. You really just want to focus on holding your original position and getting as much as you can out of it. The RSI, if it does break below the 20, that would be a good indication to just go ahead and take the profits. Even though it could keep going, it's usually an indication of it being pretty well stretched out. But so far in this run, we've made quite a few several mistakes. And now we're making just a couple of trades and starting to regain from those mistakes rather quickly. So that is one thing to keep in mind. This form of trading will actually change your account rather quickly. So if you're having a rough day, that's why you want to go ahead and set your loss limit, maybe $10 to $15. And you may also want to avoid sizing up very far. You may want to limit that to like a 0.03 or 0.04 just to try to limit your risk a little bit more. So if you are having a rough go, it doesn't pull your account down as fast. So we've got a little bit of a break across that trend line on the RSI, but now we are still in that downward approach. We could also pull the trend line and see what's happening here. We should expect reactions every time price comes to this line, but that does not mean it will continue going down just because it reacted from it. That just means people are paying attention to this and taking action based on it, so it sort of validates the technical analysis. And that's all we're doing, is just kind of following what the price is doing now. Notice I have not mentioned any of this back here. That is over and done with. We traded that already. We've gotten the effects of that already. It's over and done. Notice how it's blasting right through all of this. We got all these little levels here. It does not care. It's continuing to blast down. And a little bit further, and we will actually be in profit with this method. And there we go. We brought it back to even. Now at this point, we're starting to stretch out. Push down pretty hard. I'm going to take that off. We now have a slight, almost a little over 0.4% return. And notice we're reaching that 20 level. It's going to start wanting to pull back at a minimum to this trend line. And if I start to see another reaction off of this trend line, I will enter again. But now that we have recovered our losses and come back to the beginning of our equity, I will go back to the original starting size of 0.01 and wait to see what we're going to do. We don't necessarily want to buy here because price is showing downward action. This is more than likely going to react back to this line and come down. Does not mean it's going to reverse at all. It just means it's kind of stalling and stuttering right now. And in this case, notice this was our most recent low. We do not want to sell that low because watch here in just a few moments, price will actually come back. It typically happens a lot when it breaks a recent low, usually by a few pips, because this will often cause a lot of traders to jump in, and that will end up causing a trap for the price to come back the other way. So we're getting some very hard pushes coming down to these other levels here. And notice how we had a level here. It really has no predictive power whatsoever. Didn't give any kind of bounce back or anything. It was just completely ignored because it already happened. And apparently not very many people are paying attention to this. So now we have to watch these lows. We still don't want to sell. I'm just going to be patient a little bit longer. Now we do have what looks to be a double bottom. If we start to break back that way, it could be an option to go long. Notice how far we are away from that trend line. If nothing else, eventually it will want to pull back to that trend line. We've also broken our 20, so now all we have to do is wait. And if nothing else, we know we can probably get a few pips, 7 to 8 pips. So we have good little signal that price is probably going to hold right there. I'm going to slip that on in and see if we can get a little bit of a trace back to make a little bit more profit real quick. RSI is still staying pretty low. It will eventually fight its way back. If nothing else, we can expect that to go back to the 50. Once this goes back to the 50, it may be a good indication to go ahead and close out our position. All right, we're starting to get a little bit of a run back to that trend line. Notice we're affecting our account by small amounts, but our half a pip is all we need to cover our commission, so we'll see if it does push back above that. But our half a pip is about right here, so as long as price is above that when we close it, we've made a gain. So we'll see if we can get this little bit here, like I say, about 6 to 7 pips back up to that line. It is pushing back to the 50, but it's not really coming back. We could see, though, this to actually be a reversal and snapback. We just crossed another pretty obvious low point, so we're going to have a lot of people trying to sell for this to continue, and we need somebody in the wrong way in order for us to profit to go back the other way. So let's see if we can get this worked out. There we go, starting to push back. We're just going to try to guess at what other traders are trying to do and take advantage of their reactions and what typically will happen in that case. The number one thing is if we break new highs or new lows, as long as you remember that it's more than likely not going to keep going. Even though your psychology, your normal training, your normal instinct is it will keep going, understand that it probably will not keep going, and that will actually save you from quite a few losses in the long run. Those are easy losses to avoid. Just notice that if it is continuing past a key point, it's more than likely not going to last very long. So we'll see if this comes back for us. It's going to reach down below. You do have things such as liquidity runs. This is where it will try to break in a smaller sense. We may have what's going on in the larger sense. We had a slight break of that low, and now we have a low here, slight break of that low to trick people to continue, and we'll see if this starts to push up, because notice we're getting an upward trend of strength in the price. If it were consolidating, we'd see it kind of go a little flat. It can go flat even in other spots. Notice it's flat in this area here, and notice it's fairly tight, only a couple of pips in this area here. So we're not seeing any of that. We're actually seeing a little bit of an upward push for the RSI. We've got a little bit of a trend line going here. So we'll see if that holds up for us and gets us a little bit more profit. Sometimes you may have to hold these trades for a few minutes, but I do love to look at that because it will definitely help you out in knowing what's going on behind the candle. Notice I'm not using any kind of special rules or anything like that. I'm just kind of observing the strength as what it's doing over the last few minutes, and we reached that line. It's not going to give us much profit, but I did see a strong push down, so I'm going to expect this to actually come back. So we'll grab back in off the sell, extend that line a little bit down. Counter trending, you want to kind of be careful because notice in that example it did not amount to much, but it did bump us up just a little bit, and especially with this small account, even little small bets like that will make a significant difference in the overall gain. We're getting that strong reaction. So kind of using the reaction to indicate this as the possible end to a pullback. We're also getting near that line. We know other people are paying attention to it. It is a valid line. If it does break, then we will have to close our position. Go to the next size. I will do that. We were at 201.06 cents, so that is our new high to beat. And this will take a little bit longer. This is running at about 3 times speed. So you can expect that the duration of this video and examples of what we're doing and how we're kind of trading all this, this is not one where you're going to want to open a position and walk away. It's one where you're going to want to more or less sit on the chart and you're going to have time to observe what's going on because it's more of an in the moment style of trading. But you notice how quickly it can run the account one way or the other. So just keep in mind to have a maximum daily loss limit, and you will more than likely benefit in the long term, especially as you get more practice, you get a little bit more comfortable. You'll get a little bit more familiar. In this example, I have no idea what's going on with the CAD. I almost never trade the Canadian dollar. I am 99.99% Euro USD all the way. And that's just because I'm very familiar with the patterns of the people who trade it. So that helps me out a lot in benefit of the long run. And it helps me know kind of what to expect. I kind of know when price is going to take off all of a sudden. I kind of notice the common hours of when most people are entering trades. Especially during Tokyo, it has about 3 to 4 different points of interest where there's usually a spike in activity on the hour. Then you have your London and New York session, typical spikes, typical patterns, and typical volumes. You have just so many different little nuances that you can learn to pick up on without actually having to constantly study your fundamentals and read news and always look at everybody else's ideas to kind of figure out what they're reading. You'll kind of know what's going on just out of your own experience. So we'll see. We're still holding above our 50, so I'll think that is going to be a bottom of a pullback. We've also got an immediate support, little minor support level here. So we'll see if that level kind of holds up and this pushes as an uptrend. If it does, we will have made more gain. If not, we'll just have a slight setback and we'll size up again and try to get the next little bit to gain it up. We're only looking, I mean, we can kind of expect probably some days a few percentages and some days we may end up being close to where we started. It just kind of depends on how much the market's moving that day, how much time you have to trade, and of course how comfortable you are with hanging on to some trades, and also how good you are at identifying where you need to hit that X button. Because being very good at closing a loss quickly is going to save you a lot of money in the long run. So in this example, I think we're about to break down again, but I'm going to hang on just a little bit longer. We are kind of staying above that 50. I don't want to give it too much longer before it gets away from us. It is quite a distance to go for the low. but I don't want to give up too much of the gain and then have to size up too far to get ahead again. So we are showing momentum as slowing down. So let's see if we can get pushing down hard. Starting to snap back. Still showing at that level here. Let's see if we get some traders on our side to bring this back. If not, we can just simply size up once more and go again. I do believe this is going to try to come back a little bit for us. Starting to flatten out on the RSI. So nothing else, I would expect it to come back to here. See if it makes it or if it breaks. I think we're actually going to be breaking that back down below. So now we are going to take and make the new lows. We've broken down pretty quickly on the RSI. So we're now about $1 down from our starting balance. Now, depending on how you want to track your performance, you could go at the start of the day, or you could track it by your high balance of the day. We're going to see if I can break the high balance of the day, and then we'll end the video. This is a pretty good method to use to keep your account in control. Like I say, just the key thing is just to make sure that you don't hang on to a loser. So get very good at cutting your losses in practice, and your live account will actually serve you quite well in doing this. Naturally, as you size up, you increase the value of the move, and your losses will be maintained in the gain of the next move. So you'll recover your losses rather quickly and be able to actually make a positive impact to your account in a very short amount of time, just by doing that one simple thing of getting slightly larger as you get it wrong. And then once you get back ahead, then you size back down, and this will keep your risk in check and keep your account from going down steeply just by staying large for too long. You only want to get large to recover losses, and then size back down as soon as you can to maintain and preserve that capital as much as possible. That's the whole name of the game. And as you get better at reading price action, get better at hanging on to trades when they are going in your favor, then things will actually start to work out, and you should actually have quite the bit of opportunity to see a steady gain. So I'm going to end the account right there, but a little bit more and we could have a 1% gain for the day. And even though that may not sound like much, if you look at 1 to 2% gain per day, on average, you will very likely end up doubling your account in about 3 months. And that is the actual name of the game. As you get more comfortable, you get a little bit more money in the account. You could actually trade a little bit larger, especially as you get more comfortable with your pair that you're trading. But always keep in mind that nobody can predict the market. My crystal ball has been in the shop forever because for some reason we just can't find the part. So, nobody knows what's going to happen in the market. It could very well just rip straight up from this point. It's very unlikely, but it could happen. And we have no idea if that's going to happen or not. That is completely up to the entire world at this very split second if they all decide to buy or not. Most of them will probably stay out, so we could just expect these smaller candles to go around. So just keep that in mind as you're going. You're probably going to see between about a 30 to 40% hit rate. Intuition is usually wrong 70% of the time. So the sizing up is actually what does most of the work of preserving the capital and keeping the losses recovered. And just overall, just sheer numbers will eventually raise the account balance and get you ahead. Just know yourself, know your limits. If you're getting tired, you're getting frustrated, you're not making too much progress, you may just want to close the chart out for a while, take a break, come back later. Notice that the market is never the same. It's always changing. It's always got new events, news, new traders, new things going on. So it's always going to be different. It's going to be a new episode every day. So if you're not having any luck today, just hit this little button over here and come back tomorrow, come back later. But if you are going backwards, don't just continue to go backwards, because that will hurt you more than it will help you, and you will have a much more difficult time getting that money back later, and you'll be kicking yourself like, man, all I had to do was quit and I'd be doing a lot better right now. So set that max loss limit of, if you have a $200 account, set it for 15 to $20. You could set it for 5%, 6%, 10%. But you want to keep that fairly low, because if you have a really bad day and you lose half your account, then it's going to take you 3 months to double your account back up to regain that 50%. It's going to take you much longer to recover losses if you take significant losses. Most people would advise a stop loss. In this instance, I don't really too much worry about a stop loss. I'm generally watching the candle closes and looking for when it's definitely not going to continue doing the same thing that it's doing. Like right now, we're in an overall downtrend. So if price does start to move up, unless it broke this line, I would probably wait until it hit that line and come down again. But you could look at a shorter time frame of when it breaks this trend line here and goes up. But if you do trade against this overall direction, just expect that it will not go very far. It may go up to here and come back. So that's only 10 to 12 pips, and that's if you catch the right entry. So if market's going down, you probably want to try to trade and try to wait on trades. Wait on some red candles before you go in. And just always, always, always remember, never sell the new lows, never buy the new highs. Always wait for it to come back and then start going that way again. So in this case, we're going lower, so we would wait for green. And then as soon as we start seeing more red again and it starts moving back down, then that is when we want to buy, start selling. So if we're looking at this as a downtrend before in this example, we would actually start to look to sell once we started seeing this little group of candles here. We could have started selling here, or because we know that only a couple candles may not mean that much, we want to make sure that we get a few more red candles and then sell. And then look, we stay on the right side of the market. Our RSI is below that 50, confirming that we need to hang on to it, and kind of sort of how I did there. And eventually, once this starts to flatten out, it's time to get out, because likely, especially once it reaches the extremes, the 80 or the 20, it is very likely to come back. Notice here how it did the same thing. It started working its way back. It didn't come back very hard, but it did work its way back. Once we started to see this shift, the break of the trend line, price going down, now we're going flat, and I'll play it forward just a little bit, and notice how it snapped right back and started to go flat. Now we're in the middle range, staying flat. So just keep up with the RSI. You don't have to get too technical with it. Just read it as a price chart. You see trend line breaks, trend line break. It's going flat. So this will give you a good visual aid of what's going on immediately in the market. And notice, this is all the data we traded with. That's it. Half a day's data, and I have no idea what happened yesterday. Half a day. And we traded without any of that information. We just traded the immediate moment of what's going on. And that's the whole idea of what we're trying to do. And just size up, we'll recover our losses. And we don't even have to worry about taking huge risk-reward return ratios. The whole idea is to get that equity ahead of where it started, and that's good enough. Close it out, keep going, rinse, repeat. Rinse, repeat. We're not going to hit massive home runs. We're not going to put this trade on and go to bed. They're all going to be fairly short, but with the effect of being correct in the market or sizing up when you're wrong, you're going to keep the chains moving forward on the account and continue to make gains. you're not going to see winners a lot. You may see quite a few losers. You may get chopped up sometimes, like we kind of did in the start. Had a little bit of a rough start. That's not unusual, though, for me here lately, it seems. But the mechanics of it will eventually take care of themselves. You just have to enjoy yourself and not make it too technical. And that's basically the whole idea. And just make sure you control those losses and cut those losses, and don't put anything on hopes. Use the data, use the information that you're given. Look at what the market's trying to tell you. Look at what it's trying to do, and just look at it overall. But just remember that whatever happened here, it's over and done with. We traded that already. We got the effects of that move. It's done. It's gone. Done. Finished. There's no predictive power in support and resistance, and who knows which one's going to even be respected and do what. So you can't put too much merit into that. And I'm going to go ahead and wrap this video up because I'm sure we are getting rather long at this point. Hour and a half. Yeah, but that should pretty much cover everything with the strategy. I'll probably go on and do a few more lives later on using this strategy. But right now I've got to get a couple other videos made. I've got another basically brute force tactic video that I need to show. And right now I'm kind of working on seeing if that's going to work out in my favor or not. It does look like it has much higher odds to be in my favor than not, but I'm running forward test on that as well. So we'll visit some of those ideas in later videos, so stay tuned. And if you made it this far, I want to say thank you very much for sticking through and watching it all the way to the end. I'll try to cover a few more examples, ideas, so on and so forth. But until the next video, I'll see you next time.